Hello and welcome everyone to my channel, The Quality Investor. Today we are discussing the valuation of Costco, ticker COST. By revenue, Costco is the third largest retailer in the United States, behind only Amazon and Walmart. Costco began its operations in 1983, opening its first warehouse in Seattle, Washington. So while not the first wholesale club, Costco is the first wholesale club to offer membership to the wider public rather than businesses and government employees only. The concept was an immediate success. By 1984, Costco already had over 200,000 members and was the first ever business to go from $0 in sales to over $3 billion in sales within its first 6 years. Costco has steadily grown since each year and is widely considered one of the best managed, if not the best managed, retailers in the entire world. Because of that, Costco trades at a hefty multiple of 42x. And on this video, I want to assess if that multiple is justified or wildly overvalued. To accomplish this task, we must first understand Costco's business model and determine the width of their economic moat. Together, these two things make up the world-renowned Costco experience. Before diving into that Costco experience, please hit that like button and subscribe to the channel. Also, please hit that notification bell so you can know right away when I post more stock analysis content. Costco starts with a simple value proposition. Extend membership to the public for an annual fee in exchange for access to high-quality goods at unbeatable prices. Costco generally targets the high-income suburban homeowning segment of the market. An average Costco member earns $93,000 a year. This upper middle and upper socioeconomic class can better afford and store higher-priced bulk items. Aside from extending membership to the public, the Costco business model hinges around two key factors: warehouse design and inventory management. Selling items in bulk is where Costco creates real value. But in order to be the best, Costco has refined its store or warehouse design over the years to become ultra efficient and ruthlessly outcompete other warehouse clubs. Entering a Costco is like entering an actual distribution warehouse. It is a massive structure with shipping pallets stacked to the ceiling with bulk items. These stores quite literally double as distribution centers since the product is shipped directly from the producer to the store as a point of sale. This drastically reduces the need for intermediate storage, simplifies the supply chain logistics, and reduces inventory management costs. The aisles aren't labeled, which encourage customers to wander through the store, even if they came in for just one item. Basic human psychology takes over at that point, and thus impulse buys are common at Costco. Necessities are also located in the back of the store, also encouraging wandering. Items are stacked and displayed on shipping pallets, further adding to the warehouse aesthetic, while also leading to the next point: inventory management. The shipping pallet displays make it easy to rotate goods quickly. Forklifts and hand trucks just roll down the aisles and haul away hundreds of pounds of goods. There are no shelves to manage and keep presentable. This reduces labor costs and other overhead. Costco also has a limited amount of SKUs, about 4,000, compared to Walmart's 140,000 plus SKUs. This allows Costco's procurement team to really focus on finding high quality items for customers. A low SKU count, in addition to just-in-time stocking strategy, allows for high inventory turnover, which is the best in retail. The minuscule overhead of its warehouse design and ultra-efficient inventory management strategy enables Costco to sell items at or near cost. Costco's maximum markup on items is about 14%. This is why Costco is a cost leader and beloved by its customers. So, how is Costco different from its competitors? What gives it an economic advantage and allows growth and compounding so effortlessly? This brings us to the economic moat, and it is like no other in retail. Part of the famed Costco experience is the treasure hunt. Treasures, as Costco calls them, make up about 25% of inventory. These are luxury brands such as Coach or Prada or high-dollar electronics, where a customer might turn the corner and just suddenly find these luxuries just sitting there on a pallet and at a ridiculously low price. This makes shopping an adventure. These items might only be there for a day or two and creates a sense of urgency for the customer. Another part of the hunt is free samples. There are blogs devoted to the latest sample options, and you could conceivably have a whole meal with how many there are. The second and probably most intangible point about the economic moat is Costco's obsession with customer satisfaction. Perhaps no other retailer is as obsessed with keeping the customer happy and coming back as Costco is. The final result of Costco's customer-oriented strategy is intense customer loyalty and an almost cult-like following among its more devoted customers, where a cottage industry of Costco blogs, books, and YouTube channels now exist. This starts with the membership. The membership creates a sense of exclusivity, and customers will want to reap value from their investment, creating repeat shoppers. There is also a relentless focus on keeping prices low, which keep customers coming back. Costco forewent a planned membership price increase in 2023, stating it was not the right time amidst the high inflation environment. They also sell many items at cost, including premium brand items such as Calvin Klein jeans. And the most famous deal of them all is the hot dog and soda for $1.50. They started offering the deal in 1985 and haven't increased the price a single penny 38 years later. Costco also offers a 100% satisfaction guarantee on both membership and merchandise. By offering a liberal return policy, customers can try new products risk-free. If you don't like the first item in a box of 100, just return it. A woman once returned a Christmas tree to Costco after it died in January. She received a full refund. My third and final point about the economic moat is the business model itself. I already went into detail about the business model, so I won't do so now. However, I want to mention that Costco essentially created their model from scratch and has evolved over the years to its ultra efficiency today. This makes it incredibly difficult to reproduce, creating high barriers to entry. The goodwill and reputation Costco has built cannot be recreated with simple capital investment. All of these factors have created an economic moat so wide it will take competitors decades to cross it. Next, we're going to get into the valuation itself by looking at some historical numbers as well as where Costco might be in the next 10 years. All right, so here I am on my charts page for the income statement on my valuation file, and you can just see the phenomenal growth Costco's had in the last 10 years. Even during the COVID time frame in 2020 and 2021 on the revenue, gross profit, and net income chart for Costco, it's like the pandemic never happened. You can see that they've done a very good job in the last 5 years or so, starting to reduce their SG&A margin. They've had very consistent operating margins, and they've also done an excellent job of increasing their earnings per share. One thing to note, however, is Costco does not have a robust share buyback program, at least over the last 10 years. However, in January 2023, Costco's board did authorize a $4 billion share repurchase program, and that does expire in January of 2027. Looking at some balance sheet and cash flow charts here, you can see it's more of the same, just a steady increase in the metrics that I believe are important. They've just increased their cash over time, steady increase into the PP&E, which shows their store expansion worldwide, in fact. And one thing on the debt here, you can see their debt equity is now less than 0.5, and they've steadily decreased their debt over the last 3 or 4 years. And you can also see here that they've steadily increased, albeit slowly, their free cash flow over time, and they're clearly using that free cash flow to pay down debt and open up new Costco's. In a final set of charts here, you can see the revenue per share has increased quite nicely over the last 10 years. However, the free cash flow per share and then the adjusted free cash flow per share, which is free cash flow per share less stock-based comp per share, you can see that it hasn't increased as much as we want it to for a company like Costco. And I think a lot of that, since it is a per share metric here, I do think some of that is due to the fact that they haven't had that really robust share buyback program, sometimes even issuing new shares to pay for new Costco openings. However, it is an upward trend, and with the new share buyback program and the fact that they really don't do a lot of stock-based comp, we should not see very meaningful share dilution over the next 10 years or so. One other thing to note, you can see these four charts here, the PE ratio, price to sales, price to free cash flow, and price to book, all have just steadily increased over the last 10 years. And to me, this is what makes Costco a very difficult business to assess if it's undervalued, because the market truly does recognize how great of a business Costco actually is. And so there's never really a good time when there's that massive share price drop where you know that it's a great business that's going to be at a fair price. So it always seems like it's just very high price, but that really speaks to the incredible business model, economic moat that Costco has. So what are those numbers behind that phenomenal growth that we just saw? Well, here's the compound annual growth rates for the metrics that I feel are very important. So revenue, operating income, net income, earnings per share, and free cash flow, as well as free cash flow margin. And you can see on virtually every basis here, 1, 3, 5, and 10, they've done a great job growing the business. Revenue's up 8.7% in the last 10 years. Operating income is up 10.27% in the last 10 years. Net income's up almost 12% along with earnings per share, and they've done a phenomenal job of growing their free cash flow at 17% in the last 10 years. And the free cash flow margin percent, which is how much they've expanded their margin in the last 10 years. So they've expanded that free cash flow margin by about 8% over the last 10 years. So like I mentioned earlier, everything around Costco growth is driven by store openings and increasing membership. So I wanted to understand how to project the next 10 years of Costco revenues. I built a revenue model, and I'm basing my new store openings here based on what management said on an earnings call earlier this year. They plan to open in the next 10 years 25 stores years 1 through 5 and 30 stores years 6 through 10. So I'm actually using that as my bull. So I'm using that as a bull case, assuming that that's what they want to do. They're not going to go over that. However, it is possible that they won't achieve that growth. So I'm saying that what management said is the top line, the bull case. The base case then is going to be 20 stores years 1 through 5 and 25 6 through 10. And the bear case, if everything goes wrong, is only 15 store openings years 1 through 5 and 20 store openings 1 through 10. And right now I'm on my base case for the economic growth model, and I'll just walk through this one and then I'll show you a summary of the other two. So for the last 6 years of data, I went through and I calculated with the members per store, the paid member count, the total paid member count, which is provided in their annual reports, the fees paid per member, merchandise sales per member, merchandise sales per store, and then ultimately how that translates into membership revenue and merchandise revenue. So for 2023, for example, they had 82,462 members per store. And I'm basing my growth rates here. They're all pretty much around the average for the base case of what the historical growth is. So on a base case, pretty much if Costco just performs average and how they have historically, they will essentially grow their revenue by about 9% annually for the next 10 years. And here is my revenue growth assumptions and my growth assumptions for the bear, base, and bull cases, along with what the revenue growth assumptions, what the 5-year averages are, along with my growth assumptions, what the current growth is trailing 12 for Costco. So you can see up here the average store count, for example, it grew 2.47% in the last 5 years. My base case is just under that average at 2.35%. And if they do achieve that 25 and 30 store opening targets, then they will have a 2.81% increase in store count over the next 10 years. And paid membership, they've averaged 6.59%. And you can see here the base, that's my base case is actually slightly below that paid membership historical growth. And my bull case is at 7.2% growth in the next 10 years. So you can see here how revenue growth is actually driven. It's really driven by new store openings and then increasing membership per store. So, if you add 2.35 and 4%, you're going to get roughly the 6.44% here for the paid member count. One thing to note on my revenue growth here is the last 5-year average growth has been 11.34%. My bull case, I'm actually assuming just under 1% less than what they've done on the last 5 years historically. Keep that in mind. And then on my base case is about a 9% growth. I do think it's realistic that they're not going to have the same crazy growth that they have had in the next 10 years. So my bull case is kind of reflecting that. And down here on my growth assumptions, the way I'm projecting these growth assumptions is based on how they've expanded their margins, for example, in the past. So with operating margin in year 10, I'm projecting on my base case a 3.75% operating margin in year 10. For bull case, for example, a 4% operating margin in year 10, meaning right now they're at a 3.35% operating margin, and over the next 10 years they'll expand that margin up to 4% for the bull case, for example. And then coming down here to the free cash flow section of the growth assumptions, you can see in the last 10 years they've grown their free cash flow annually at 17.4%, and I am projecting in my bull case a 12.59% compound annual growth over the next 10 years. So all in all, I believe these are fairly conservative estimates, and even the bull case is pretty conservative when you are comparing to what they've done currently in their growth of these metrics here. So after dropping all those numbers into my discounted cash flow model, we can see here I take the present value of the free cash flows over the next 10 years and I discount them back at a discount rate of 8%. And then I assume a 3% perpetual growth rate for my terminal exit value. And ultimately, that will give us a discounted cash flow share price for my Costco base case of $565.22. On to my dividend discount valuation model. We can see here the dividend growth has been quite extraordinary for Costco. Over the last 10 years, they've averaged 12.62% growth. And we can see once I plug in all of the growth rates over the next 5 years, I'm projecting on my base case here, and then 11% growth in that dividend over the next 5 years, and then a perpetual dividend growth of 7.375%. And you can see that's probably not going to be hard at all for Costco to achieve that, given that they have a free cash flow payout ratio of 18.55%. That gives us a dividend discount model price of $731.14. So ultimately, what is the value of Costco? Now, remember, this is my base case. So right now you can see that a PE ratio and the forward PE ratio are both quite high compared to their 5 and 10 year averages. Now the big reveal. So we come over here, I have my discounted cash flow and dividend price. I'm not including the exit multiple valuation nor Graham's valuation. I'm not including the exit multiple because there's just not really good comps for Costco just due to how their business is organized versus how some other retailers are organized. And ultimately, that gives us a valuation average for my base case of $623.29, which is a 4% upside from the current price. Now, I have a 10% margin of safety, and that ultimately gives us a buy price here of $560.96 and a desired PE of 39.6, and currently a recommendation of wait. So at first glance, it does appear they're a little bit overvalued, at least on the base case, And I think that Costco is one of those businesses that will always trade at a premium, just given how phenomenal of a business model Costco has, and the market certainly recognizes that. So what does that bear case and bull case valuation tell us? We will start with the bear case. So with the bear case, we see that we have an acceptable buy price of $450.27, which is a downside of 16.5%. Of course, we have that 10% margin of safety, which brings it down even more, and then a desired PE of 31.8. So the bear case assumes that Costco drastically misses on their new store opening targets, and we saw earlier that new stores and membership growth is what drives Costco's revenue. All right, so now on to the bull case for Costco. And remember, my bull case essentially assumes that Costco hits their store opening targets provided by management earlier this year. Okay, so here we are on the bull case, and you can see that we have an acceptable buy price of $610.32, and that's with a 20% margin of safety. I'm really giving myself some room for error here. And the discounted cash flow is $675.06, and the dividend is an incredible $926.03. That's assuming 12% dividend growth over the next 5 years, basically what their current average is for dividend growth, and then a 7.5% discount rate for the dividend discount model. So if Costco performs as management basically expects them to perform, they will have a very nice share growth over the next 10 years. That also gives us a desired PE of 43.1. And given how safe Costco's business really is, if we wanted to have a 10% margin of safety, right now there's quite a lot of room to buy, $686.61. And just for context, I think I saw an analyst estimate for the share price for Costco, share target price for Costco in the next year or so at $680. So in my view, this is not an extreme valuation, and really Costco doesn't have to do anything above and beyond what they're already doing to achieve this. But what I think these valuations tell us at the end of the day is that Costco is just a phenomenal business, and people really do love being associated with such a reputable brand like Costco. So I am actually not a member. However, I went there this weekend with some friends that are members, and even though they go each week, they were genuinely excited about the trip. The parking lot was completely full. There were lines at the sample stations. People were in aisles shoulder to shoulder, and there was a line of cars wrapped around the parking lot waiting to fill up on gas. So Costco is a fantastic business and arguably one of the best retailers in the entire world. But before we go, I do want to remind everyone that this is not financial advice, and I currently do not own any stake in Costco. So with that, thank you for watching today's video. And what do you think? Is this a fair valuation of Costco? Let me know in the comments below. Finally, please hit that like button. And if you found this info helpful, subscribe to the channel. Thank you and happy investing.